So is there anything particularly you want to know, or do you just want me to run you through some stuff?
One thing I've been curious about is how you do risk management. So on a trade that's going against you, is there a point where you double down? Do you have a stop loss set?
If I'm doing it manually, it doesn't really go against me. If I'm doing it automated, yeah, definitely, because automated doesn't understand doing it with a trend or not with a trend. So, I mean, I would put a stop loss under a break level. I can't really tell you the last time I've ever had a stop loss hit. And I take TPs at first resistance. So, realistically, as soon as I have a TP taken at first resistance, I'll move my stop loss to entry. So every trade is going to exit and profit, even if it reverses back to entry. And I try not to FOMO in and take late entries. Like the first problem with risk management is, well, the first problem with a trade that you lose on is, why did you take it in the first place? Like, you should have known it was not going to work. So that's and I know that's a bit of a bold statement, but like if you look at price structure like this, this is going to go up. But entering it here, you're already entering it way too late. You should have been entering it down here, and there's ways to figure that out. And if you are entering it down here, you would have been able to take a TP at your first resistance, and then your stop would be at break even. And there's always the first part of the move that just is definitely going to play out, like this this trade here, which was based off a weekly break in here. That was never going to not make money. So I guess to answer your question, stop loss would be under a break level based on entry, and the break level would be the entry point would be the greediest entry point you could find. So chances of you actually ever getting a stop loss hit is going to be pretty damn low. So that's, for example, if you were taking this trade, you could lazily just enter when that candle there closes if you wanted to, and you would put your stop loss down under here, and you would take a TP there, which is where it's heading. And then at that point, if this did reverse now, which it could do, because to build structure, you need multiple distribution candles. So this kind of needs another week in distribution at some point so that it can get an uptrend in here. So which is why you take your TP at your first resistance, and once you've taken that TP, let's say you'd entered here at the base or at the close of that candle, then as soon as you've taken, say, 50% off the table at your first TP, then you introduce your stop loss here at your entry. And before that, you could have a stop loss all the way down here, which effectively makes it, similar to a one-to-one trade, maybe not quite a one-to-one trade at the beginning. But the chances that it doesn't go and hit that on a weekly break are tiny. Like, go buy a lotto ticket. If you got stopped out on that to begin with, go enter a lottery. Like, better chance of winning. So yeah.
Typically, the other question I had is, if you were to identify a trend, do you typically start with a long-term time frame and then drill down to a smaller time frame to find an entry?
Yeah. Yep. So you find the biggest trend that you can. So like in this case here, it was weekly. So weekly there to there, weekly down to there because of this. And once you've drilled down on it, then you could array the trends. So your anchor point, that might as well just stay as it is, like that one. This one here, you'd leave your anchor point there, and then you've got your pivot point down here, and then you could take it down to, say, like a 1 day. There's a few rules around doing this, like you've got to make sure that things are divisible. So you don't array a trend from like a month to a week, because it's not an even amount of weeks in a month. But you can pretty much array any time frame to a daily, because like anything higher than daily is going to fit into a daily. So you take that down, and then you just need to use like hourly breaks that are factors of 1440, and then you need something evenly divisible into the factor that you choose. So if this was your monthly, and then you look for a daily, like which is this one, which is closed in accumulation because it's an accumulation trend. It has to be in accumulation, body completely clear of the line. So it can't be this one. You couldn't move it to this because that's on the line. So you can take that trend and you can put it over here, which then means this is your entry candle, that one. So what you would do is you would look for the support under this break, and then you would wait to enter on that support. So effectively your entry becomes that. So when you go into, so it's a monthly target, and you've refined it to a daily trend, which still has a monthly origin. So it's going to go back to a monthly target, and you're looking for an entry on the support generated by the break of the support that was created to break the trend, and then you enter on the retest of the support, and then you, like in this case, this would basically be your trade. So you can enter anywhere in that candle, and there's ways to refine it down, but you would be entering like that. And so this is an example of just a basic algorithmic fib structure. So entry here, level 1, level 2, level 3, level 4, and you tend to find that like at maximum you're going to have 4 levels play out. And in this case you did have 4 levels played out, because if you flick back to a weekly chart, you knew your first weekly resistance was there, and you were taking an entry off a weekly break. So nothing can stop you but something of the same or a higher time frame. So given that the fourth level, like I wouldn't have put a TP at $2.08. I would have put it just below this. So TP out at like $2.07. Even though it did go to the fourth, but like, why take the risk? It could be one of those trades that just doesn't get there. So you'd be taking your first TP here, second, third, and then I would adjust down here and just go slightly below that. So that's weekly defined to daily. You can define it down further and enter off an even lower time frame candle. Sometimes that's not necessarily better. You might find the lower time frame candle is a higher entry. So weekly, first weekly resistance, second weekly resistance is in there. Wrong tool. So if you wanted to try and take the trade further, then that would be your next area. Once that is touched, there will almost certainly be a rejection, and that rejection is what's going to lead to the creation of the weekly support trend, which doesn't exist at this stage. But it will exist if you get a distribution candle rejection off that. It comes down, and then that becomes your anchor point somewhere around there, and then it needs to hold that trend and basically follow that until it gets through here.
So, sorry, I just have a question. How did you determine the first anchor point on the very first weekly trend you defined?
So that actually wasn't the first anchor point, but that was the relevant one. But so you got that, which is your first trend, which then becomes that, because this candle breaks completely clear of that. And so this is fractally, this is a area where it's trying to create resistance, and the break of that area is that. So this kind of happened really fast, because at the point of this creation, there was technically no resistance until this candle closes. So what you tend to find is that you get a fast breakout, like that candle just shoots up, and its target was the top of this candle. In turn, that breaks the resistance, but then it fails. And that's actually quite important, because that there is your true breakout level. Like, it's not the top here, it's not the all-time high, it's this. if you close a candle over that, then you'll go into price discovery. And you can tell that because it created that and it should have laddered up off it, but it didn't. It then dropped back and then it found that as resistance ongoing, and then it reversed. So just sort of sidetracking here a little bit. If you ever hit a break level, which is that, and then you lose the trend, which was that at the time, then that break level there becomes a breakout level for the future. So it's quite an important level just to mark on your chart, because you know that if it ever closes a candle above that, it's going to moon. Like those are those kind of trades that just shoot up. I was looking at one of those actually on something, not one I took, but there's something in here that just went absolutely parabolic when it hit its break level. I'll find it at some point. We'll find it. So yeah, that was your first trend. And then that gets arrayed to there. And then you get an interior because this doesn't touch the trend. And then you get another interior. So these are basically levels of distribution or suppression. And then you get that trend, that's the nice trend to be breaking because it's nice and long. Meanwhile, you could be shorting this, by the way, like as soon as you've had this big shoot up like this and it breaks that, but it can't stay over it, and then it rejects it a second time and it breaks its trend. The first trade actually here is this, which is a short. So you re-enter in here because this has now created resistance, and then you can short it down the levels. Because this is quite a new token, it's really, really hard to know where it's going to stop because there's no actual real support down here. It was just going to go until it decided to stop or break that downtrend, which is what it's done here. Now it'll have a go at recovering. So if I opened this up and decided to put my Let's Make Money hat on, let's say we were sitting there and we closed this month, the first thing I would do would be put a line like that and I'd then go through to the next month and we'd open on the other side like that. You could take it down to daily, see if you can refine it to a daily. At this point you can. So you go to there, go through your daily. So you'd be waiting to see if you can get a pullback to resistance at this point and a close over it. So that one is the one that breaks that trend, but it's basically already gone above your target. And then here's your pullback. That'd be your uptrend. You've broken break level. So this is bottom of that's your break level for trying to form support here. So it's broken trend, broken break level, it's going to fail. And yeah. So you could array this trend out, but ultimately once it breaks that break level, it's you should be looking to short it rather than long it. It's lost it again. So, what it's finding, like all these levels of support that it's finding in here, they're just fractal time frames within this. Like that would be one there. That'd be a level of support. There'd probably be another one when you get down here. On a different time frame, that's one there as well. So you've got that, you've got that. That was one that failed. So
basically you don't ever take the fib trade on a broken trend because
and the other way. Yeah.
Right.
So when you were in an uptrend like if we rewind this to you're effectively long in the top. You don't know you're long in the top at the time, which kind of is what it is, but it's a downtrend, and definitely not an uptrend. So if you were taking that as an example, and then you array it to there, the moment you close that candle, you're moving down. So anything after that, you should be looking for shorts rather than looking for longs. And there's your first short, would be off the underside of that one, and then that's what starts to go down. So even though this here looks like you're going long in the moment, it's a pretty risky trade to be taking, because that got right to there. You're still in a downtrend, right, on that move there. And it would have played out, like it would have gone down and up like that, and probably actually won. But the thing is, it was you were basically trading against trend, whereas this one here, short, easy. This one, short, easy. And then it's not until you break trend again that you start looking for longs. So we broke down, we were shorting, we're starting to break up. So we break up. We don't have a support trend yet. But at this point, you would be more confident taking longs. Issue being they wouldn't be 1-for-1 candle longs. Like you'd have to take group fibs from in here because you don't even have a distribution candle to work off in that yet. You got one there, and that's your first. Here's your up. Here's your down. And I don't know whether you would have won that. Probably depends. What are we on? Daily. Because that's sort of where your trend is already breaking. So that was your uptrend. And you try to take that long, but you're taking it on a candle that's closed on the opposite side of your trend. You're actually taking along at the moment of failure. So that's relatively risky. Yeah, enters there, goes up there, doesn't quite target. It's just all downhill from that moment.
Assuming you did take that trade, how would you handle that going to the downside?
You'd look for this effectively, like see what it's done there. So if you entered here, say with whatever 10 tokens, just go just 10, nice round number, 10, 10, 10, 50 TP, you're out in profit. So you would average it because most ranges get retested when they're broken. So when that breaks below here, it's going to generally go back up like that. It won't necessarily go back up to the 1618 target, but it will go back up into the range before rejection goes down. So that's typically how you would do it. I mean, if you're manually trading, you just wouldn't do it because you're literally taking a long on the candle that breaks a trend. So yeah, you just wouldn't do it. You'd want sort of this candle to be the one that enters it. Like if this candle came down and hit it, it would win because it would go back up. But this candle hadn't hit that yet, or when it had hit that, it was already under the trend where it opened. So chances of it going back up is quite low. Oh, there you go. You would have won. Just depends whether you wanted to take the risk, I suppose. So no one wouldn't have entered it, or I wouldn't have. Number two, if for some bizarre reason I was stuck in it because I was drunk and did enter it, I would average through these levels, with the biggest average being there, and I would TP as I re-enter the range, which would get you out in profit. Number 3 is blind luck. You won. And I mean, there is, like, even if you're going against trend, there's still sort of like a 90, what time frames is daily, there's still like about a 95, 97% win rate. So that was going to happen, maybe. And so now you're quite comfortably in a downtrend. So you'd be looking to take shorts from this point.
Sorry, just a quick question. So I know we're at a higher time frame like the daily. So say you wanted to play within the 15, 30-minute range.
Yep.
Do you still start your analysis from the weekly, daily, down to the hourly?
Yep. Always start it on the top, because the only thing that can go against you is something bigger than what you're trading on. So if you're trading on a 15-minute time frame, there's a lot of things bigger than a 15-minute time frame. So the idea would be to trade with trend. It's sort of like on Sol when we broke this. When this happened, and we broke a 2-week time frame, there. Should you be longing? I mean, anything from $213 down to $262, you should just be looking for shorts. And you can find those on any time frame you want, and you should, because realistically, risk reward is going to be exactly the same regardless of the time frame that you're on. You're just going to be in the trade longer, or in the trade less time. So from the moment this candle closed, which would have been Monday the 3rd, yeah. Let's go down to, just look at 1 days. So now, from the moment this candle closed, Monday the 3rd, all you should do is look for shorts, and it wouldn't matter what time frame. Like, you could look, say, on a 4-hour, you could look at a 1 hour. What do you usually trade on, like 30-minute?
Yeah, 30-minute or 15-minute.
Okay. So as you can see, you got longs, and you could definitely take longs, but you've got to be conscious you're taking longs against a very high time frame downtrend. So these longs aren't necessarily going to always play out. What you'd want to do is you'd want to check for some kind of interior trend change. So, which is no different than checking the bigger trends. Like, you just check here, and as an example, and you'd wait for a break, and you would take some kind of support. So 15-minute, there's a break there. That's a support candle. That's a support. Most of this has already been checked or already been used. You could enter on that. Swings down past and then goes back up. Could have entered on that one.
Then on that one, you would just keep adding to your trade to get it out earlier, maybe?
Yeah, I mean, you could escape that trade early. It had already sort of broken trend. Like, this is because you've chosen to trade against trend, and that was your initial uptrend, and it's already failing. So there's nothing to stop that falling off a cliff from there.
Oh, for sure.
And that's next. So I mean, you're losing quite a bit of strength. That's next. So you're basically just hoping that you break this older, longer trend and get some kind of move to the upside. And the move's really reasonably limited. Like this would have been a TP level here. And that's kind of a TP level there. So when you break that trend, which is this candle, which breaks it, you'd be looking for an entry in this support area here. And your first TP is pretty close by, being here. And if you break that, you'll get a retracement, which is what this is. And it will retrace to some kind of support. And then if that support holds, which in this case it used the trend as support, it'll go for this break level, which is what it did there. And then this becomes a higher time frame support, that whole area there. You'd have to go to the higher time frame chart, and that becomes a move. And then that's the test of that support. And then it'll be heading to a break level up here somewhere, something on a higher time frame. Like that's an hourly there. So that's the candle opened at 9 o'clock. So you're on a 30-minute time frame, but that's an hourly break level. So that's where it was heading, because this would be, yeah, that's an hourly as well. So that was midnight. So when it broke that, it broke an hourly. It retested an hourly. It went to an hourly. So you can kind of tell from just like where the candle open and close times when you're looking at a chart. You might be on a 30-minute chart, but you're actually looking at an hourly move. I mean, technically, one of those was midnight, so it could have been anything. It could have been like a 4-hour. It could have been a lot of different time frames.
Sorry, can you just one more time? Can you tell me how you identified those take profit levels?
So when you get let's say, where is a area? That's a take profit. Okay. And the reason that's a take profit is it's the start of distribution. So there's two levels when distribution begins. There's an inverse level, which is on this time frame is that, and there's a break level, which is that. Now, the idea of the inverse level under here, which is going to be the bottom of the accumulation, is going to be to hold the price down. So that's the thing that's trying to be the resistance, trying to keep the price from being able to move up, which is why it struggles to get through it here. But once it starts to break, an inverse level, the next target is the break level or the beginning of the distribution. So when you break a trend, for price to reverse trend, it needs to break distribution. So your accumulation candle is there to there. So this candle, its target is this being the hold level or this being the break level. And ultimately, it really wants that break level, because if it breaks it, it can start to move up in price rather than rejecting and continuing down in price. So those two parts of any candle structure are effectively your TPs. So if you had refined this to something smaller, which 5 minute. Really should have turned replay tool on. So, 30-minute anchor point is there. That candle's on the line, so you can't use it. That candle is completely clear of the line, so you can take your 30-minute and you can refine it to there. Doesn't really help you all that much because you're here. I mean, it's better. It's better. So when that candle there closes, Maybe you can take this smaller. Let's go 1 minute. Let's use this. So we have a 1 minute. Yes. Beautiful. That. Okay. So this candle, this 1 minute candle is clear of that trend. So that trend is now time arrayed through divisible timeframes from 30 minutes to 5 minutes to 1 minute. When this candle breaks the trend and closes, you can enter along and you can TP at your first resistance based on the original anchor point of the time frame of the original anchor point. So if we take it back to 30 minutes, your 30-minute resistance TP is there, as in your inverse level, but your entry was there. So you entered at 190 and you TP'd at 197, and so your entire trade was over within one 30-minute candle, but you effectively traded the breakout of that range or the breakout of that trend by refining it down in time, if that makes sense.
It does. So can you find basically...
Pretty fucking cool, eh?
Yeah, that's freaking awesome.
Yeah, that helped out a lot. Because I was struggling to find out how we use short bias or long bias, but that did it right there.
Yeah. So I mean that's only because like we still have to be really conscious. You're in a 2-week downtrend. But there's certain rules that apply, and so like when interior trends like that one on the 30-minute are broken, it still should head to a minimum of that. Like I've got a trade on at the moment on this, which is a cracker. Isn't it? Yeah, this has got a wicked trend break. What's on this? Oh yeah. Daily's there. 1, 2, 1, 2, 3. 1, 2. Not touching. 3, 4, 5. There's a lot of relevance to 5, right? By the time you've arrayed a trend out 5 times like that, you've typically completed all of your accumulation, and your move is going to start. Like you're going to head up. So this trade was entered on that candle there. So it's and just under the break level, and we're heading there. So it's like a 1 to 4. So
very cool.
So what you see right there is exactly the same as what you could do on a 30-minute chart or a 1 hour chart or anything effectively, because it's all just fractal. But the real trick is finding the lowest time frame entries for the higher time frame moves, and that's where real big RR trades are done, because if you know that you're coming up here and you're just waiting to try and find the lowest entry you can down inside that daily candle, and you can do that by arraying these trends through time, so that like you saw a 1 minute candle could initiate your trade for a 30-minute move and give you a $5 move on your 30-minute chart.
Okay. So do you
There's heaps of like this right now.
Do you still use your fib levels, or are you mostly just using trends at the moment?
I mostly use the fib levels for the bot. It's just, and ultimately also for targets, working out targets. But the problem with fib trading on a bot is that you can only put a really small percentage of your portfolio on each trade, because it's not aware of the way things are trending. So it's just you put 1% on per trade and leave it be, and it's going to win 97% of them, which averages out the ones that end up in drawdown, and the ones that ended up in drawdown actually end up coming back eventually. So yeah, that's, whereas if I was manually trading, this is how I've made my money. It's you can make a lot more manually trading. It just takes more time.
Right. Very cool.
So just a question. So for like, I'm a novato, let's just say. Say I wanted to do leverage plays. What time frame do you recommend, and how much leverage to say I have a $5,000 trading account?
Well, leverage is based on your stop loss. Like, it's based on your risk and how much you want to risk per trade, and how that equates to a percentage of your portfolio, I suppose. Like, I'll show you. Do I have a thing? CPS. TP. Because leverage is really only a tool for taking bigger trades than what you have the money to take, but they still need to fall within your risk management. So can you see that on the screen? Okay. So let's say you had a $5,000 account and you wanted to risk 2% per trade, and your entry price, let's say on Sol, was, you were planning, and like when you plan a trade, you need to know your entry, you need to know your invalidation, you need to know your target. So if we said we were wanting to enter at 174 and our stop loss was 170, what that is saying is that I can open a position of $4,300, and if I hit my stop loss, I lose 2% of my $5,000 balance. So therefore, I'm not going to use any leverage, because the distance between here and here is too great. So you actually shouldn't be using leverage. But let's just say you've refined that entry down to like that 1 minute candle, and now you're like super confident, I'm going to enter here, but I can actually have my stop loss at 173.8. Well, now you can open up an $86,950 position, so you can be using a hell of a lot of leverage. It all depends on what that is, what you want to risk, and what the difference between these two are.
For a beginner, for a beginner level trader, what risk profile do you usually recommend?
It depends on your win rate. Like, if you've got a win rate, say 50%, then keep it low. Don't put too much in, because a win rate of 50% isn't going to be a win, a loss, a win, a loss, a win, a loss, a win, a loss. It's going to be an average. So over time. So if this is too high, you could wipe your account out. Even if you were doing one-to-one trades at 50%, because you might just get a string of losses.
Right.
So you definitely keep these numbers really low until your win rate, gets up. And then once they get up, you can start taking, much bigger trades on it. There'd be people that I know there's a couple of people out there that are doing that.
Yeah, that's crazy.
But a lot of it depends on refining your entries. It fixes so many issues with trading. It's just getting the right entry, which is a lot of the time it's patience. You just have to wait. And there's so many tokens out there. Like, yesterday it was this, today it's this. Sol's just stuffing around, but it's working its way towards it. We've got a daily trend here now. We don't have a weekly, but we've got a daily. So it's go to that's invalid. Go to that. Go to that. There. There. 4 hour.
sorry, just before you keep going, how did you decide that at that point there would be another array there?
So particularly it's the way the candles are. Okay. So trends always start with the first two. So it's going to be, if it's on the top, it's accumulation to accumulation. If it's on the bottom, it's distribution to distribution. Those are your first two trends that exist on that. This is a different type of trend. It's not really valid as a support trend because it's going down. It needs to be going up, as a support trend, or it needs to be going down as a resistance. So when you get a candle that closes completely over the top of this first trend, that is where you move it. So I can't move it to this wick. And the reason I can't move it to that wick is because it's cutting through the body of the candle.
Right.
So now if I do move it to that wick, it's invalid anyway because it's now facing up. So what happens is that becomes my new swing high. So I start with this one and I move to this one. Then you can get interior trends. So interior trends is where you have another accumulation candle that is sitting completely below. It hasn't touched it, it's not on it, it's not above it, it's completely below. So you take the pivot point being there and you start your next trend. And then you have to look really, really closely because this can be a little bit tricky sometimes. But you got to zoom right in and make sure that this is not touching this, and it is. So the corner, just there, that little nick on the corner, means that that is not a candle that you can move your trend to. But this one is. It's completely clear. The body is clear. So the wick can be touching, but the body must be clear. So I can now move that to there. And then we've got another interior here for the moment. So let's just pretend we've got that. So what happens when we break that interior trend? We test first resistance. Okay, where's first resistance? First resistance is down here. Okay. So we've broken the trend, but first resistance is down low, which means we're going to go up and we're going to find some other form of resistance, which is typically going to be something in here. It'll be a lower time frame. So if we drop that to a lower time frame, there'll be more ups and downs inside of it. And so that's where that's gone up and it's found that. So, and in a way, that's actually a fib trade as well. Like you've got these two. You could short that line if you wanted to, and then down you go. So you could then move that interior to there. Right. And then you could try and move it to there, but there's no point moving it to there because as soon as you move it to there, you're actually above the exterior. So at which point that's gone. And this pivot point moves to that next candle. And then not this one because it's on it. And this one doesn't break it because it's on it. If this candle here closes an accumulation for the day, you break your daily downtrend and you move towards your first target, being that one or that one. And that's sort of why, in the group, I'm sort of saying, hey, keep an eye on 188, because we've actually already broken this downtrend, but we've just done it on a fractal level, like a lower level.
Right.
So at some point, that thing's going to kick up and go to 188 as soon as everyone starts shorting properly. Our markets seem to work. Everyone goes short, price go up. So we're here. If none of this existed at the time, well, let's say this didn't exist at the time, what you could do is you could array this to 4 hours. And that's why we know this is going to break. But because before any of this existed and all we had was this down and no up, you could go 4 hour and you've got which pivot points there. You've got that 4 hour and then that 4 hour. And so now we've got a 1 day move pivoted to a 4 hour move. And so now you can take this and you can go to there. And then you have to look really closely at that next candle. See whether it's touching it, not touching it. So you can go to there, and then you forget about that one. You've got interiors. So if you wanted to get on this really early, like you would take this, you would run it to there. Got another interior, there, another interior, there. Okay, that's your entry. This is actually how you find the absolute bottom. There you go.
That's beautiful.
You're entering in this range. I didn't even enter in that range. I entered here, just close, I suppose. But
that's awesome.
That's life.
That
So
just clicked in my brain for the first time. Sorry, I'm a slow learner.
And so there's your fib trade, and so chuck your fib on there, get your entry, take a TP there, right? Set your stop loss to the break level, let it ride. It's going to go and on a 4-hour target, you were going to hit that, and that's where see how it went there. And I mean, I'm probably one of the most risk averse traders you've ever met, although you see my 45x trades that I post in the group sometimes. Yeah. I am probably one of the most risk averse traders you've ever met. So I always take a TP at a very, very early level. Like in that case, you've only moved up like $2-3, and I'm already taking a TP there. But I just don't want to get stopped out at a loss. If I get stopped out, I want to get stopped out break even or at profit. And no matter how many times I tell my brain that I know it's going to go to that price, my brain doesn't listen. It goes, "No, fuck it, take some profit." And then it goes up there. You take your second TP. The one thing about taking a TP into a structural resistance like that is you will always get a chance to re-enter the trade lower. It's just a given. So when it hit that line there, the first thing it did is reject. So if you wanted to compound money, then you re-enter on that. So you hit there at 175 and you re-enter at 172.
Right.
Because the first time it touches that, it will always retrace to support if it's on the right time frames. Like if you're taking, if you jump in on a monthly move and TP on a 4-hour position, it could just blow through it because it's a monthly move. Right. So, but yeah, in this case, it's an arrayed 4-hour trend. It's going to go to a 4-hour level, and that was that.
Okay.
So yeah, the whole trade. I mean, you could just take that as a trade, but it's all part of a bigger trade, and realistically, the bigger trade is going to go to a level up here.
Man, this is blowing my mind right now.
Yeah, mine exploded a while ago.
I'm just surprised it's taking so damn long. Maybe the Marty joke is true. He puts out a bullish tree. Wintermute starts selling supply.
Yeah.
So
I was looking at a weekly. I think it was a weekly fib down on that same area, and then drilled down to a daily entry.
Yep. I think it was that one. Oh yeah, that's the one that went fucking parabolic. Look at that one. Okay. Check that move. Whoomp.
Freaking God candles.
Yeah. So I haven't actually drilled into this yet, but what it will be is it'll be a range that keeps on rejecting. So that rejection, fail, rejection, fail, rejection, fail. Yeah, so I think that lost trend 3 times, bouncing off that level. So when it closes that level, it's going to fly. There'll be something on a lower time frame. So levels that get tested over and over and over again, and each time they get tested, they result in a trend failure. If you ever start to see that scenario, the moment the candle closes above that level, it's just going to go berserk. So that's it's hard to say what that even was. It really went for it, didn't it? It retested something there. Yeah, so you got to. So this is like where you got multiple points of failure. Like that range broke there, broke, failed, and then that range broke and failed. So this is just like a compounding effect of range failure. Broke, didn't go up and test. Broke, tested, broke, didn't go test, dumped. And then that's just epic. Yeah. So if you get continual breakdown or range failure like that, quite often the price will just go absolutely berserk if it ever gets out of it, which is what you see there.
Right. So are you watching just a ton of different tokens, or are there any specific like ways that you identify tokens, or do you just look at high time frames on anything you can find?
Yeah, pretty much. I mean, I looked at this one ages ago for a really big breakout when it was down here, and it had just been in accumulation for such a long time. Like the longer something is in accumulation, the more failed breaks it'll have and the higher it will go. So it's no different than why Sol shot up the way it did. But something that's like this down in accumulation for such a long time is going to moon,
Okay.
So yeah, I just tend to flick through them and see how they look, and you can pick pretty quickly. But the thing is, you've got to pick something like this is a great example of one that there would be a trade that's going to come up on this. It's got to look shit, because if it looks shit, it hasn't gone yet, and you want to get it before it goes, not after. So this looks shit. But what looks shit will eventually reverse, and so you could go and look at it on a higher time frame, and you can already see that it's going into weekly accumulation. So that was your first weekly break. It took out that break level. So now there's two targets. Target one, it already was above target one, so there's target two. All right, so when that candle broke, it came down, found support in here, and went up and hit that. And then once it hits that, it's going to retrace. So that's when it comes back down to here. And coming back down to here, it finds support in a bigger range, something like that. And support in that. And that's a really big range to find support in, which is why you got quite a rapid move up like that.
Very cool.
Yeah. Go over how you identified the two targets again.
So first, what you're looking for a downtrend is you're looking for distribution that breaks past the bottom. Right? So it's an engulfment, but the wick needs to at least be below the wick of the accumulation. So target one is the beginning of the distribution cycle, which was there. That's distribution. And that there is where accumulation began. So basically where accumulation began is going to be one target when price is down lower. Like in this case, when the trend broke, the price was already above that. So that's just not a target. So that's a target as an example. That's a resistance. That was our trend. BTC is trying to break out of that little channel. That close there was our signal that we're going to get a move. It's not going to move to this target because that's below it. So that's a really obvious trade. It's going there, that line, because it ain't going to go backwards. And now, if it had got above that line, the next target would be this line, which is the beginning of that distribution phase.
So it's mainly off of the distribution phases that you're looking for those TPs?
No. You're actually, to be safer, you're looking, well, in that case, yes, because you're actually breaking a trend and you're already above the beginning of accumulation. But typically, that's not going to be the case. Typically, you'll be below. So if we look here in this trend, which is there, when we break trend here, we're looking to TP off that accumulation. This is, again, a really bad example, actually, because that accumulation had already been hit here. So, bad example. It must be an interior trend.
Go back to the one where we just were looking prior. So that would be a good example of where we could drill down to a lower time frame and then have a longer target.
Yeah, that's candle just didn't move enough, but that trend arrayed down to there. This trade was kind of over by the time the candle closed, like, because that was a target, but it was already hit. So whatever happened in there happened in a lower time frame. So you probably take it to a day. So this is probably a better example. That's a target. Let's just delete all these trends. Let's just do this on the daily. Okay, so that was a target. When this broke trend, that's where it went. This was a target. For the trend to reverse and for the price to continue moving up, it had to hit that, and it didn't hit that. So therefore, it was going to keep going down. So that's the rule of thumb. Like, if it hits the bottom target, that's all good. You've made money on your trade. If it hits the top target, you are probably going to get a reversal of trend, and instead of being down, it's going to start going up. Like, that's the rule. But because this candle was completely clear of trend, it then moves there, and then you get a new target, which is here for your break, and you get this target here, which at a higher time frame, on a 2-day time frame, that becomes a target as well. That goes down. Now, this break of trend, you've already got another accumulation distribution in here. So you've now got targets here and here. So when this candle closes, you can take a trade to that price there. It's only like $1.16 to $1.19, but that was basically a given. It was going to do that. In this case, it hit the break level, so it's going to actually try and reverse the trend, which you can see it did. Like, it said up, down, up, but it failed when it hit that exterior trend. So when it hits just the inverse in there and doesn't touch that line there, it's definitely just going to go down. But if it hits that line, it's going to try and ladder up. But in this particular case, it was laddering up into the exterior trend, which it failed to break, and therefore down it goes. So if you were trading this on this exact time frame, you would have had a TP. I mean, you would have entered a trade here effectively. You would have had a TP there, and that's about the only safe part of the whole move. Once it went and hit that, then you would take another TP at the trend, because it's probably not going to get to that. And the reason for that is that that's above the trend. So it was going to be, because of this, which is a large amount of distribution, that big wick, and the fact that it's up above the trend, it was going to be near on impossible for this token to actually recover that downtrend, because it was blocked by this. And it needs to break that wick to actually really keep going up. And yeah, so that just wasn't going to happen there. So now these targets are off the board. You're technically in an uptrend until you break that uptrend, which is there. So you can actually be longing to that trend and already realizing that there's going to be a short. If you follow, because you broke it, you long to your trend, which is all because of this candle break and that break level break, and the fact you can't touch that. So it's going to get here. Like, it could have got there anywhere in there. Like, it could have gone to there or there or there or there or wherever. And then you've created a support trend which you've broken, but you hadn't done that yet, and you're going to go there. So then you go there, and then you come down, and based on like simple fib trading, your short starts there, and as you can see, it comes down all 4 levels, keeps going. And as soon as you break that break level, which is that candle there, then that whole area in there becomes resistance. So started there, those candles came down, they broke that. That is now resistance. Then on a bigger time scale, they break this. All of this is resistance. That's why the price can't get past it over there. So it's trying to get through that trend, but it's also running into all this resistance at these prices, trying to get through that trend. So over here, it was a trend that was stopping it getting to a break level. And over here, it's horizontal resistance stopping it from getting through trend. Little buggers work together.
Do you think that you could do this on Bitcoin like currently? I just like seeing it like playing out in real time, and just helps me understand a little more.
So it's not closed yet. What do we got going on in here? Okay, so can't do much on that time frame. Yeah, so there's not much you can do on this higher than a daily. So let's just start with, that is our first trend, which got broken. And as you can see, it went for the break level, but failed the break level. So that means that somewhere through here is going to be a very big breakout level. Like if it gets above that, you'll see big expansion very fast. But trend for that has become there. broke here, hit the break level, failed. Again, just reinforcing that once it actually overcomes this level, expansion. So trend becomes there. Comes down to there. 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 We've broken daily trend on the interior, so we're going up. Targets are
on that interior. Hadn't you broken daily trend on the candle before it actually?
Yeah. Unfortunately, we can't go back in time and take that entry. Yeah, it's that one there. Mm-hmm. So that one does the break, which means you're then looking for something in this range, like in that little candle there is your entry. But there's typically 5 stages to accumulation as well, so you just got to make sure you've sort of had enough, like 1, 2, 3. So we're at 3 to that trend. 4, 5. So you'd be safer to be looking for something here. And incidentally, like if you look at this, 3 or 5 stages of distribution, that's not a structural break. That's not really a structural break. I mean, it's kind of a 2 for 2. That's a short break. That, which is the 5th level of distribution, is your first strong indication of a long. So if you're looking for an entry, it really should be post this and somewhere in here.
Right.
And it did actually keep going down quite a bit, all the way down to there. I was actually looking at this the other day and just thinking to myself, what the hell is holding this up? Like, this is not very organic price action through here. Mm-hmm. Something's keeping that up.
And sorry, just one more time for remembering sake. When you do hit the -5, you don't necessarily double down on your entry, you like quadruple or 5 times the amount?
You got it. Yeah, so to be, well, that's what the bot does. It's 10, 10, 10, 50. And then it TPs as it retraces back into the range. Mm-hmm. Yeah, so that effectively closes out that partial position in profit, okay. Which, yeah, if you're stuck at the bottom of a range and it's going the wrong way, then that's about the safest way to get out of it. But for a manual trade, you wouldn't have really entered that. Mm-hmm. Not until, or you'd be looking for something. Where would you have entered? Okay. Could have technically entered there, but it'd be your first. This candle is really the one, because that's after you had 5 levels of distribution. So you're sort of looking for your first structural break after 5 levels of distribution, which is actually here. So to really, from a fib trade perspective, if you're doing it manually, you're looking to enter in here.
Okay.
And you may get, like, that entry technically hasn't happened yet. So right. That's...
Is there significance in the 5 levels of distribution, or what is the...
Yeah, it's a bit weird. So it's something that tends to play out on a higher time frame, like, and it can happen on a lower time frame, I suppose, as well. But like, if you look over a really, look at, say, market cycles, and market cycles can be 5-minute cycles. They can be hourly cycles. Like, it's just a cycle. 1, 2, 3, 4, 5. That was your first reversal and all of that. Because distribution is happening on the way down, and technically it then turns into accumulation at the bottom and then starts to go up. So you tend to get these cycles of 5 layers of distribution, and then most of your genuine reversals happen after there's been about 5 layers of distribution. So that's all the way down, and then through here is where you start taking longs.
Right. Okay.
Yeah.
Thank you for explaining that again. Sorry.
Yeah. I don't really know why. Let's not lose that line, eh? That'll be a problem. Yep. So, questions?
Man, I learned so much on this live.
Yeah. I mean, it's quite spooky when you start to do some of the stuff. Like you array these trends out, and I mean, effectively the downside is it makes you often just sit there and wait for a trade, or you just have to go and find another token that's sitting in a different position. But you know, you go there, skip that one, there, skip that one, there. That's your trend, right? So even this dump, it's kind of to be expected because this candle is the candle that broke the trend. So we break a trend, we retest a trend. So did you think when the January candle closed in February? I mean, so many people were talking about how February was such a bullish month for crypto and it's always to the moon in February and all this kind of stuff. I'm sitting there looking at this going, we're going to close this candle and we haven't retested trend. Uh-oh. And then what do? We go and retest it. That's basically, and we've got 7 days to get back up above this line. If we do not get above that line in 7 days, don't bother longing SOL. And you'll notice that that line is 189. And you'll notice that our targets at the moment are 188 to 189. Like, do you see the confluence in all of this?
Wow.
Yeah.
It's almost like the monthly rejection is actually already pre-planned before the monthly rejection actually happens. Like it's really, really, really likely that if we stay down here for 9 days, then we go up, we hit that, we go there.
Wow.
And if we go there to that price, we do not actually break our bullish monthly structure, because to do that, we have to go there. And that's 120, not 123. And I know it's splitting hairs, but these fuckers could take that price all the way down to 120, and you're technically still in a bull market.
That's incredible.
Wow.
Yup.
I'm not going to sleep tonight.
Do you have a really big long open?
No. It's just after seeing this, it's going to make me want to be on the charts and just start practicing this because it's blowing my mind.
Yeah, well, like something I do just while I wait for proper entries to happen. Bitcoin's looking really good right now too, on a lower time frame for a breakout. I do stuff like this, not necessarily on a monthly chart because there's not that many candles, but you go, cool. So this is a 2-month fractal because we're on a monthly and we're 2 for 2. So there's our first short. Do we get an entry? Play. Do we get an entry? Gotta wait months to get your entry. Cool, we get an entry. Do we get a TP? Oh, stop. We do get a TP, but before we get a TP, we create another structural break. So should we TP there, or is there going to be a lower TP? Well, nah, it's higher. So we're going to get our TP. We're probably, or could go back up and then back down again. And so we get our TP, or we keep going down. How many levels does it go down? We get another structural break. So you could, because you're still in the downtrend. If you ran a trend line, you're still in the downtrend. Do we get another structural break? Yes, we do. This one can't go to its fourth level because that would be negative dollar value. So this is probably the bottom, that's about to form. So we get to level 2. What do we get? It's going to be an upside break, is it? It is. We get our first long. How long do we have to wait for our long? And we've broken through trend by now, or we are breaking through trend by now. There's a long in there. And then we go down and we take the greedy along. It's been sitting there and waiting. And then we go up. We don't take the break level, right? So we're still technically, the price is still being held down. Oh, we took the break level. Off we go. We're going to reject when we get to this candle. There we go. There's our rejection. We're recovering the rejection. Do we take the break level? If we take the break level, we're going to go to this candle. There we go. Now we go down for support in this candle. Then we start to range.
That hasn't really touched that support. Do you think we'll still go back there?
It has actually touched the support because like fib trades are based off bodies, but support's actually based off wicks, especially on high time frames. Because if you think about like that wick in there, where does the distribution actually start? All the way up here, right? And it would start with like a 5-minute candle or whatever, a 1 minute, a 10-second candle, something. And that closes to the downside, and that moves to being a 15-minute, which closes to the downside, which moves to being a 1 hour that closes to the downside, and a 4 hour, and a daily, and a multi-day, and then eventually you get to a month, right? So technically, when you're dealing with support zones, it's the whole candle like that. And they can provide support more times than once because there's multiple levels within them, which is why all that. And their target is going to be a like-for-like time frame resistance, which is here. So every single time price entered this box, you could long, and every single time it entered that box, you could TP until the day that that gets broken, because that's your break level for your resistance. Once that gets broken, you are then looking to move up to a higher level. So if you're just looking at
broken with the body, not with a wick.
Broken on the wick. Yeah.
With a candle body.
This case wick of the distribution would break. So this here breaks it. Okay. It doesn't actually close over it. So there's a couple different things. Like if it breaks it, it's broken, but it's still expected to reject, which is why you get that rejection. And when you get that rejection, it's got to go find support. And the support that it's going to look for is going to be in here somewhere. Like it could be this. So it could be in that range, which is what it did. Found that support. And it went up. And then what it's going to do is look to get over this. But once it gets over that, you should see some pretty rapid acceleration because there's no longer any resistance. So you've hit a monthly support level. Where is your monthly resistance now? There's none. Because this blue candle did not break the bottom of that yellow candle. This is not resistance in these 2 months. This was resistance, and it's been broken by that candle. I've hit a monthly support level, and I have absolutely nothing to stop me. So this is a car that has no brakes. And that's why you get that big move up. And that was our blow off top, up to 195 or whatever, because we went in there, foot went on the accelerator, there were no brakes. We were going to get that.
Was there something up at the top that you would have looked at to take profits after that blow off top?
Yeah, this is why picking tops is really hard. There's a few things you could do. Like you can try and find the reverse of a trend, but there'll be a lot of them. Could hit that. Nah, so it hasn't got there yet. I don't think it could be that. So this top here was based on that, but this top, the only other thing you can do is try and find a fib level. And I actually think it was a fib level, but it was even that didn't really get it properly. Yeah, 288, pretty close.
I'm confused a little on this fib drawing right now, how it's being drawn.
Yeah, so the way it's been drawn doesn't really make a lot of sense to anybody, including me. But it's sort of based on this work here going over that body there, and that being the distribution prior to that completion of accumulation. So it's not actually on that time frame, like it'll be something else. See if we can find it. Nope. No. No. I mean, it's really, really, really hard to pick tops. I think I had 305 as a top, and it was because it was just a number that just continuously kept coming up on a lot of things. But it wasn't right. Yeah. That's really close. What's that on? Daily. No. No. A smarter person than me can find that.
Nothing on the daily that you would have looked at as a trend break to the downside, where you would have just pulled out and taken some profits?
Yeah, I got out at like about 280 roughly, which was based on this here. So yeah, when we started to lose trend, it was like, okay, this thing's toast. How did I get to that? It wasn't on a weekly. It was on. I think I went daily 4 hour. Where I got to that, I basically arrayed the parabola up, and then caught one of these rejections up around here, and then basically shorted the candle that was in there. It was. Where did I find that? No, because that didn't exist. Yeah. This was our ProLab. I can't even say that word. This is when it went parabolic. There.
Are you still counting 5 up through here?
No, but that would work from lower down. That would, not from this point. Yeah, so that was a 4 hour, and it was an hourly at the same time. So that particular pivot point. There, and that can be taken to there. And then that was where we lost. Yeah. So it was that candle at 273, which we'd gone all the way up here. That broke outside of trend. That shot up like that. And then that created the first structural break to the downside. And then this one followed it, creating that second structural break. And that was where I exited on the test of that. So it was about 270 something, 277, 278. So that was taking 4 hour trends down to 1 hour trends, and then identifying a breakup structure, and then checking to see if it recovered. But like I was sort of waiting to see if it would hit this trend and actually go back up or keep going back up, but instead it created a structural break. I was like, nah, let's get out. And then got out on the, should have shorted it. That's really. But
I think I'm.
That's great.
Yeah, it's 1, 2, 3, 5. And yes, it is 5. 1, 2, 3, 4, 5. Yeah.
I think I'm still confused on how you array from an interior trend or interior trend.
So start on. Ooh, looking good. Which way do you want to do it?
Either way.
Okay, so let's look at, we're arraying a trend for a short. Okay, so you could start here on like a monthly, and it would be, say we'll go lowest to lowest, and then that moves to that one because it's completely clear of it. This one's cutting through it, so we skip it. This is completely clear of it, so we move to there. Now we're gaining strength because this is well above it. So now that becomes our arrayed trend, but these are still in the same time frame. But then that becomes your next one. And this doesn't change on this time frame because these candle bodies are touching, and the very corner all touching. So on that monthly time frame, you're done. So now we'll go down to a daily. And then you find your pivot point, which is here. And then you look for the first daily candle that opens and closes completely below the line forward of the pivot point, because charts don't go backwards. And it's up here. So this big dumpy one here. So then you move your monthly trend pivot point to there, leaving the original anchor where it was. And then you've got this dumpy one here. You come forward to that one. It's not this big one because that's on it. And then you've got that one, followed by that one, and scarily that one. So that's your, so that gave me a great example because it ends here. So that is your highest time frame trend you have on your chart right now.
Right.
That's pretty freaking risky. We start closing dailies under here. Eek. So we don't have anything that we can really do with that right now, because this hasn't closed. Ideally, actually, you want this candle to close in distribution. You want it to close at, say, 175, and then that will give you a array off that trend. At the moment, you've just got this new local trend which is formed, which is that. So, yeah, you probably can't do a hell of a lot with that. It's stopped. If you get a daily candle close below here, short. Let's find another one. Find something a bit more, because there's always more than one trend. Or let's just do a downtrend because we're in a downtrend. Okay, so there. So just stepping through all the candles that are completely open and close above the line. So skipping this here, skipping this there. Okay, let's just pretend that's where we are at that point in time. Let's put this little fella on. Okay. Then we'll go to our daily and find our pivot point, which is here. And we have this daily candle completely above the line. So we're going to move it to here. Okay. And you can see that sort of how that then respects it over there. So that's now, that candle has been time arrayed from monthly to daily. And it's our exterior trend. So now we can work off an interior. So from that pivot point to that, we now have an interior trend. And just get rid of all that shit. So we've got that interior and we're miles away from it. And then we get an array of that interior to there. And so we're looking for a break of this interior, which will lead to a break of this interior, which will lead to a break of that exterior.
Okay.
There you go. This is going to want to test this, but this could get in the way of it. So if you were going to take this as a breakout trade, you would be TPing at whatever one it hits first, being the trend or the inverse here. But you would have had to have refined that to a smaller to a smaller level. Otherwise, you'd be taking the trade all the way up here anyway. So let's just see how that. Cool. So we have now another interior, which is that one. You have another one. This is the kind of thing that builds to really explosive moves, because when it breaks through all of this and closes on the other side, you tend to get decent move up. Okay, so this is a break of an interior of an interior of an interior.
Okay.
You see how it's going for the other one.
Yeah.
That breaks the next one. That breaks the next one. There we go. That's when you get your volume kicking in. So once you get through this stuff, you tend to get your volume kicking in, and it's going to go for break levels, which is that, and it's going to want that. Probably can't get to that because it's above the trend. It's shielded by the higher time frame trend.
Mm-hmm.
So it might go for that.
So break levels is any wick that goes above the interior trend?
So a break level is the top of the resistance.
Oh, okay.
Called a break level because if you hit it, you're broken the resistance.
Okay.
So we now have. Whoops. What did I just do? I should have been adding these as we go, but that became another trend. And as they start to array out like this, this is,
swinging
clearly becoming an uptrend. Actually, sorry, that's not a trend because that's on the line.
Mm-hmm.
That becomes a trend. And that's what's now suppressing that. And it didn't hit the break level of that move, but it did hit the break level of this move, which is where it then found the support. So it flipped all of this into support to try and push up, to try and break that break level. It didn't hit it, so therefore it created a new trend, interior of that exterior, and that trend is now going to try and hold the price down. And its job is to try and break this horizontal support. And if it can, it has to get to here to break the horizontal support. Which it does. And then it flips it into resistance and it finds support. Okay, so now you got another interior. Yep. So once it closes over that line, so that's a break of your interior. That's a break level. That's a break level for resistance, and that is a higher time frame block of resistance there. So it's got to get through this stuff, and then if it gets through that stuff, break level for that's up there. And that's actually gone now. That doesn't exist anymore. So that's where you would have taken your first TP. And so this is a rejection from break level. This is not necessarily going to mean that you're going down. This actually, like, you've broken the break level, so that resistance technically is gone now, unless it becomes a breakout level. So this will create a trend, but if that trend gets broken, then this becomes one of those levels that sends price, up really, really high. You don't know that at this stage because this is creating that trend there. And we have a new interior. And that's the one that's trying to suppress us. That doesn't break it. That does.
And the breaks are always determined by wicks, not bodies, correct?
Yep. Okay. And so see how it's hit this resistance now? And that's now your rejection of resistance. So this is higher time frame than the chart we're on because it's made up of so many candles. And it's going to try and push us back down.
Okay.
And then, so it's kind of why you've got to take your TPs at certain points because you know what they're going to do. So then we've got another interior, which is going to try and now suppress price. But guess what? So technically, because it had broken that break level, that was gone. It had broken that break level, so that was gone. It had already tested that. Now that could be tested more than one time. Like hold levels can hold price down for longer than just one rejection, but it's already weaker because it's been hit. And it actually didn't break trend. So this created the trend. This hit it. This closed on it. That is not a break of trend. So that sort of basically says in a roundabout kind of way that wasn't a very strong hold level because a strong hold level would break the price down in trend, which it didn't do. And so now it should definitely target this break level. Like it's not been a very happy camper if it doesn't do that. There's actually another fractal resistance in there though, which is actually the resistance on this time frame itself. That's the resistance on this time frame. Technically, that's resistance on a different time frame. That's resistance on a different one. That's resistance on a different one. The back of all those candles, they're all just different time frames. So that's that. We've now hit that hold level. Whether it breaks trend or not, I might as well get rid of this one. Done. No, so that's failed to break trend. So this is where trends break horizontals, and horizontals are designed to break diagonals. It's trying to push it through trend. Trend's trying to push through the horizontals. That's really close to the break level. That could almost actually be the break level because sometimes there are such things as rounding errors. That's definitely the break level. So it should pose some kind of rejection. There it is. And it's coming back down here to find support in this area. If it can't find support in this area, it's going to have to go try and find support down in this area. But that's gone. That's broken. That's the next level of resistance. Yep. Down she goes. Down she goes. Down. So there's more trends, obviously, that we can be putting in here as it goes. Mm-hmm. That's our first uptrend. So let's throw that in there. Got a new uptrend. So this is now this area down in here, which if you had to measure out what is a support zone, that's a support zone. it's these distributions broken by these accumulations, and it's the wick to the wick of the distributions, and the break of that area is going to be cutting through that accumulation, which it didn't do. It went into the support zone, it went up, it's trying to break the trend, has broken the trend, it's got a new suppression trend. What have we hit? We've hit backside resistance. You see how the price moves on charts?
Yeah.
So it's trends, supports, and resistances. And that literally explains where every single candle moves on a chart. Down. This is support, little one. This is support. And then this is bigger support still down here. So you're actually building support, which is how this looks quite positive when you look at that's actually support. And even this, that's actually support.
Because every time distribution breaks, or every time accumulation breaks distribution, it becomes support.
You got it.
Cool. That finally clicked.
And then, and there's our trend. We just closed below it. So because we've closed below trend, we need, like, this is not a short you'd take, just purely because they've got all the support formed, and yeah, you've broken, oops, sorry, that's not downtrend, that's the downtrend. You've broken this downtrend, but you're breaking a downtrend into really close support. So it's just one you just don't take.
Oh, that was another question I was gonna ask you. You just reminded me. What are like the rules of not taking a trade?
Well, same rules as pretty much everything else. Don't take a trade in, like, don't take a long into resistance. Don't take a short into support. Generally, if you're going to be shorting, you should have broken your downtrend, and you want this first support to be a reasonable distance below so that you actually get something out of the trade at your first TP. So that level's been hit. That level hasn't. Neither's that. And that's the break of our move.
Okay. Sorry, I hope my questions aren't annoying. I'm just trying to understand.
Huh? There you go. Boom, boom, boom. We're going to break move. Oh, that might be a break. Pretty close. Should reject. Yeah, it does. Okay, what does it find? It finds support because that's support. And you could either array, you could array this trend up to there, and then you could put another one on it. I mean, you can keep adding trends. You can see that it has broken trend, but it's broken trend straight into that support.
Mm-hmm.
So that's not necessarily, like I say, not necessarily a short that you'd want to be taking. That's definitely broken the break level. So all of this resistance at the top of the range is gone, but you still have some slightly older resistance back here, and you've still got that break level up there, or that hold level up there, and then you've got that break level above trend, which is going to be really hard to get to.
Is the hold level always the bottom of the accumulation?
Yep, or it's going to be the top of the distribution if it's on the underside.
Right. Okay.
So it's all just inverted. One just inverts to the other. So this is broken. You get a rejection as expected. That's been hit. You get a rejection as expected. There's some other fractal time frames in there, smaller time frames. And there. Then you're up to that one, that's the tricky one because it's up above here. If it hits that, it's probably going to be mooning. So there you go. Should reject. Yep. One more. Yep. Should reject. Yep. So they're done. So now it needs to find support. Support exists here, but it also exists here now, which has been hit once, but it also exists on a different fractal time frame there, which hadn't been hit, and that's where it's found support. It's broken its trend, mooning. Now, see what I said? If it gets to this, it's probably going to moon. And the reason for that is to get to that, you got to break the trend.
Mm-hmm.
So that was its target at that moment. There really wasn't anywhere else for it to go. It was going to have to go there, and it did. So yeah, that trend is basically welcome to early signs of trend failure. I wonder where that goes. Oh yeah. And we're now up to current time. So yeah, we went for that level, which meant we broke above that trend, which meant we shot up. There would have been something older. There you go. The origin of the trend. Welcome to how charts work. So when you break a trend, your target is going to be the origin of the trend. So if you break a trend from all-time high, your target is going to be all-time high. Like that's pretty much how that works.
Mm-hmm. Very cool.
So yeah, if you can do that, I mean, it's actually quite easy to do that on a daily chart because, and you can do that in real life on a daily chart. You can trade like that because you've got a day
Right.
to make your choices. It's a lot harder to do it on a 30-minute chart, a 5-minute chart.
But it's all just work.
Yeah,
That too.
But it's all just the same. So if we look at where we're at now, and you try to predict the future, there, that doesn't work. So there's our exterior. First interior. Checking. You got to check the wicks. Sorry, got to check the corners of the bodies. See if they touch. Yep, it's touching. There. There. Basically as far as you can go to that trend on that time frame, and then drop it down. There. Array your interior. Yeah. Interior anywhere in here.
Okay.
Target. As you can see, we're moving up while we've been talking. That target's been hit already. Next target is break level, 177.916. Next target is that, which is weak because it's been hit, creating the downtrend. Next target is there at 186.856. Next target there. Next target there. We're into the 192s. That's just on this time frame. Bigger time frame, things you're going to be worried about is whatever's up in here, whatever the big stuff is.
Mm-hmm.
And even like that, bottom of that wick, it was this wick that kept us down there like that for all that time. That was the little bastard that was doing that. Because 168 is a really big, high time frame resistance.
Mm-hmm.
It's all of that, basically. So, yeah, it was never going to go back up fast. But yeah, that's looking very healthy. It's trying to move up. And if we put we've got that interior trend here. Even if we close down for the day, it doesn't really matter because it gives you a strengthened arrayed trend like that. That's actually a good thing. Like if you close down, it doesn't actually mean anything bad based on where it is, but and we've probably got a 4 hour. That's our 4 hour. There, to there, to there. So we're still holding the 4 hour. Holding the 4 hour, and we're heading for a 4 hour break level. We should get a rejection at 177.916. It just depends on whether that rejection leads to a trend break, in which case that becomes a breakout level for the future, or whether the trend holds the price, in which case it will carry through to these next two levels. Yeah, if you were in the trade from down here, then you would have taken your first TP at 175, 167, 168 up to 175. And then you'd be waiting to see what happens when it breaks through that.
So in other words, let's go trend. Let's go trend.
Yeah. I mean, ultimately, it's all just trends and horizontals. Like you want that trend to support that price to break that horizontal. And you can put weight based on time and weight based on age. Like if a trend starts on a higher time frame from an older point in time, it's going to be a stronger trend than a newer trend. Just think of it as big money patience. Like people with millions and millions of dollars have been waiting for that trend for a long time, and they are going to deploy when it gets to it, whether it's short or long. They're going to do something. You're going to get a reaction off it. That's why there's always a reaction of all-time highs. Yeah, anyone who thinks you're going to tap an all-time high and then just go up to the moon, no, there's always going to be a reaction. That's
when the big boys come to play.
Yeah, because I mean they're trading on monthly, 3-monthly, weekly timeframes, and they need this kind of daily chop and accumulation to twop their orders in because they can't put their order in a single order, and they're not going to set up a single limit order in the system and have this ginormous obvious thing on the order box. They're going to use time weighted orders where every time it hits a certain average price over time, it's going to do the next limit, the next limit, the next limit, the next limit. So it's going to keep price in a range, while they basically enter their orders.
That makes sense.
Yeah, it's why you always see sideways. The accumulation distribution, it's always sideways. And that's a sign that it's reversing. Which, that's what's happening there. That is them selling. They don't sell here. They might sell some, but that's not where a big player is going to sell. They're going to sell here. And they're also going to sell here as it goes up, which is the other trick for spread. Like if you're TPing just before a rejection, you're TPing at positive spread. If you TP exactly at the rejection, chances are your spread's going to be negative. So when it's a small order, it doesn't really make a world of difference to you. But like you imagine TPing a $100,000 order on Sol on a weekend during low liquidity at exactly the moment that you hit a TP level and everyone else TPs, all the algos TP, you're going to end up with a much lower price than you thought you were getting. So it's just, yeah, TP just before as the algos are still pushing the price up. Joke's on them. And Bitcoin is looking very good.
That emoji.
You've been looking at it for sure.
So this has been stuck in a really tight horizontal range. It's breaking through its interiors. It's holding its supports. There's only one reason price behaves like this, and it's trying to break that exterior trend. So this could be the moment for Bitcoin very soon. Which sort of coincides with so many of these other altcoins when you start looking at them and you go, well, they've all been ranging in accumulation now for a little bit. It just takes something to push and then up they'll go.
I mean, I guess it is the leader, right?
Yep. So place your bets where you think Sol's going next after everything you've just seen.
It's going to 180 for sure.
Yeah,
Well,
it's probably going to. Yeah, it's probably going to break the break level. So that, and if it hits the break level, that invalidates all the resistance that exists in that period there. But it should reject off a break level. The first time a break level is hit, it almost rejects 100% of the time. And what creates a breakout level is if that rejection leads to a break of trend. What creates continuation is if that rejection does not lead to a break of trend.
So hit the break level, come back to trend, and then see if trend holds.
Yeah, that's right.
The tug of war, who's stronger, huh?
Bingo. That's all it is. And so once you learn that, you can become pretty good at where you take your profits. You can become pretty good at where you get your entries. You can, and you know whether to hold a trade or not. Like, you know that it's going to fail.
And I'm guessing it's like anything, just more repetition. The more you see it, the more
Yeah.
confidence you gain.
Yeah. So I mean, I don't actually draw all the trend lines much anymore because you can just sort of see them, and yeah, it just gets, and you can see the supports and resistances. I mean, I only really put them on there so I can get the actual number to key in on the order. That's about it.
Man, you got the special goggles. We need to get those special goggles.
Yeah.
Oh, it's just tons of practice. You just chuck it's tons of trades, tons of practice. Replay tool is awesome. You try to look away. Pick a token that you're not familiar with. Look away as much as you can. Scroll the screen back. Click the button. Choose a moment in time. Like you don't want to be biased. You don't want to see, what's going to happen, and then you just trade it. And you'll realize pretty quickly when you're winning.
You had to sell that back testing to try it for sure.
Yeah. I mean, it always plays out. Like, it's just finding, like, if you want a quick scalp, it's going to be really easy to find a quick scalp. If you want a good trade and you want to move a decent percentage, it's about finding something that's got the right structure, and that's like, this is great. Like a big drop like that, with resistance up here, that's awesome. Internally arrayed trends, finding lower entries to actually trade up. And then you just need the patience because, it does take several 4-hour candles for that to play out. But you can have the confidence that that will play out. The first rejection or the first TP point is something that when you've done this enough and once you've jumped on these charts and played enough with this, the first point just always happens. So yeah, you just find a downtrend, wait for it to break, get a refined entry, and take your TP at the first point. And if you just did that, you might sit there and in your journal write, oh shit, I could have held it and it went another 10%. Or you could also be writing in your journal, hey, I've got a 100% win rate and I've won on every trade because you just took the first TP, which is the one that's always going to hit. Right. And you'll find there's, if anything, a fib trade will be typically a lower number than trading this way. So like if you'd put all of the structure that you see in there, and we know where the price was going, which it was going to go here. That was a definite based on this trend break down in here. So if we'd taken the fib trade here, we would have TP'd at 168.987, even though we could have gone to 175. What is that number? 175.3. So fib trades are good. Manual trading's better. Using them both in confluence, awesome. Yeah.
I feel like you've given us the key to unlock a treasure chest.
Yeah. And that's pretty much all I do for my living.
Dude, we're just a bunch of pirates, man.
Yeah. Yeah.
We just found our Capitan, man. We're just following it.
Yeah, well, it's not hard. I mean, you could. I don't know whether you've watched the whole Cotton Candy series, but basically most of this is just Cotton Candy. I don't think he gets too in depth into how to do it. Or I remember when I first did Cotton Candy, I still wasn't really that clear on it, and then it just took a lot of time to figure it out, and then yeah.
And Cotton Candy's the other trader that you learned from?
Yeah, so there's like a 200 video free course online.
Oh, wow.
which is not the easiest thing to get through.
Right. Do you think it's worth it though if we do put the time in?
Yeah, I think after what I've just shown you, if you did do that course, you would then realize even more about what I'm talking about.
Mm-hmm.
Yeah, but the course doesn't really tell you how to get it into how to execute it.
Right.
Like it gives you all the fundamentals, it gives you all the technical stuff, and then you sit there and you go, oh shit, so time has relevance.
Mm-hmm.
Okay, I fully understand now how support and resistance is created. Once you know how it's created, you can see it being created. And that changes how you manage a trade, because they're fluid. An event could happen that actually changes a trade. And that's yeah. But I don't know. I usually tell people the 3 things that they should do is they should understand smart money concepts, because you really want to know where whales are trying to push the price, how and when they're going to liquidate people, and how they will structure a chart to make people put their stop losses and liquidation levels at certain areas. And those are the areas where you're going to get an entry opportunity, because those are the areas they're going to target. So people should learn smart money concepts. And a lot of that's to do with market sessions as well. So you'll see like in New York and London and Hong Kong, they all kind of work together to create structure on a chart, which then leads people down the path of making choices. And they think they're smart making those choices, but those choices have been influenced. and those choices put them in a position to get wiped out later. So yeah, understanding smart money concepts is important. Understanding market structure, because you really do need to just understand, is a chart going up or down? That's quite important. And then actual price action trading. The most advanced stuff I've ever seen on price action trading is cotton candy TA. And it's potentially too advanced for some people, but it's just, you really start to understand the importance of a trend line, like what I've just showed you. And you really start to understand the difference between certain points of resistance, like whether it's designed to hold price down, whether it's designed to indicate continuation, how to tell, whether you will be seeing continuation or not. Yeah, that kind of stuff. So if people do those three things and then they practice, and understanding leverage and that kind of stuff, it's really just understanding risk percentages. And a lot of trades, you're not going to use leverage unless you have such a tight stop loss versus your account size. It's versus your risk percentage. It's just maths. There's refining levels and stuff like that, which is way more advanced. Like if you're looking to find, what could we do? Let's refine that level. And then there's order blocks. Like there's a lot, there is a difference in what creates a fast bounce like that versus what creates slow accumulation like that. Like there's a difference in structure, and you can actually trade it. So like if we go daily, and this is the concept of like what I call a 1v2 versus a 1v1, and how you get a fast move off one and then you get a slow move off the other. So see this area here. So this one candle engulfs these two. You enter the trade there, you get a fast move to the 1618, like a rapid move. Then you get a slow bleed down. Then you get a large sort of accumulation period, and then you get a secondary move, right? Now that is because of how order blocks work. So order blocks have front sides and back sides of order blocks create rapid, fast price momentum, and they're lazy market orders at a higher level, just waiting to go. And then greedy orders are at the front side of the order block, and so they're going to be based in the first candle. And so they're limit orders where they want to get filled, but they're not going to accept anyone's price but yours. And so you're going to, or theirs, sorry, and they're going to get more accumulation before they move the price up. So it's different traders or different whales. They're just going to take the price, shove it up, TP, and that's here, woomph, TP, job done. Marketing whales. Here, slow patient whales, twop, accumulate. Once they've filled their orders, push up, TP. So the structure of candles, how they're broken, creates differences in how they will react. And then there'll be some level that, like this, there'll be some level that created that bounce. And every time price reverses, there is a reason. So this is, see that level through there? So it's in this candle. And it's lower than that. And it's lower than that. And it's lower than that. Good. Oops. Yep, she's lower than that. We are 1 minute. Okay. Yeah, we got some structure. So it's a bit higher than that. Ooh, this one's hard to find. Not 30 minutes. Not 1 minute. Not 15 seconds. That. Fifteen. 10 seconds support. 5 seconds. Same. Haha. Displacements. See that? 109.417 was the bottom of the big dump. And what it was targeting was it was targeting a displacement on a 1 second chart inside a 10-second support in the bottom of a wick.
That's crazy how you refine that. Is that the fair value gap or what it needs to?
So this is a displacement. So displacements, when you see a displacement on a low time frame, doesn't mean too much because it's just there was no orders filled in that moment in time, no orders exchanged. When you see them on a high time frame, it means a lot because it means some institution that has just come in and they've put orders through the system well outside of whatever the current going price is. So there was actually some really big displacements just recently. Actually, I remember waking up and having a look on a chart and going, shit, someone's hit the buy button. But yeah, that line through there is basically where the wick targeted. And so there's always a target. Like it just depends on whether you can find them in advance and have them all mapped out. And no one's going to find a 1 second target. And the problem is there's just too many of them. Like that's a 1 second target. So is that. Okay, maybe there's not that many of them. 1, 2, 3, 4, 5. There's a few down there. But yeah, that's like, so when you see the charts and they have those big wicks, going back to there. Play that into the future. So when you get those dumps, they're always targeting something. And there'd be another one up in here somewhere. And then there'd be something in here, which is what that's going to. And that's why a support can support price more times than one, because on one time frame there'll be something inside of it, and then on another time frame there'll be something else, and on another time frame there'll be something else. And so yeah, high time frame supports can often support price multiple times. It's really only when something completely breaks the bottom of them that they're gone, and that's why, or the top of them, and that's why they call it a break level, because it's cleared out every possible time frame that exists inside that support or resistance. So just as a really basic example, here's an example. And you've got that's your break level. and that yellow candle is your resistance, and it rejects once, twice. If you include these, it actually rejects once and then off the wick, because the wick is something. So 1, 2, 3, 4, and then the break level goes there. Once the break level's gone, there's nothing anymore inside that to create resistance, and then the price can move up.
Didn't you say that 99% of the time price hits a break level, it'll retrace or rebound?
Yeah, it'll reject. So that's that lovely rejection there.
Okay.
So you've hit a break level, you've rejected, and then you can imagine all the people that chase that pump. Whoop.
Yeah.
So when a break level is hit, you're going to get retracement to support. So you should be looking for an entry, and there's a support. So that's where you should be looking to enter.
Do you always enter on the top of support or in the middle, or how do you determine entry on support?
Depends whether I'm feeling lazy. Yeah, it depends whether I'm feeling lazy. That support there actually got broken.
Mm-hmm.
So the support that held that price up is actually this one.
I see that.
Which is smaller. Yeah, just depends whether I'm feeling lazy or whether I'm doing really high leverage trading or whether I'm just doing a swing trade. Like, if it's a swing trade, it doesn't matter. You just enter at the top. I mean, you know where your first TP is going to be, and it's going to be well above this. It's going to be something from the past. So, first TP is going to be that. Then there's your break level. Yep. So I wouldn't really, in fact, actually first, it's going to be a break level because first TP was already taken out in that first move up. So it's going to hit your break level. So if I entered at $112 knowing that my first TP was 138, I'd be okay with that. If I entered at the bottom at $103 and took my first TP at 137, 138, I'd be okay with that as well. Just depends on how greedy you want to be. The problem with being too greedy is you might not get the trade because you got a support level that can send the price up. You got another support level that can send the price up. Who's to say it gets to this one? You don't know.
Right.
This support level is structurally stronger, like even though it's smaller, and that's just because the yellow wick is lower than the blue, whereas that yellow wick is higher. So, like if you were betting on it, this is stronger, this is stronger, this is weaker. So that might be a reason for you to take that one and ignore that one. But it's entirely possible it goes into that candle, then goes up.
Right. Okay.
You wouldn't take that one because that did that. You might take that one. That's not very greedy. That would be your laziest point. Absolute laziest point. You wouldn't take that because it's done. Could take that. Could take that.
Very cool.
And and because that is a daily, you could potentially break it down, and because we don't know how fast that moved up or down, right? So let's see how that actually was. Was it fast? It might have been fast up, slow down, you know?
Mm-hmm.
Have a look how that actually was on the day. Yeah, it moved pretty quick.
Very.
How she went. Sometimes there will also be some pretty good indications. So what are we on one day? Let's have a look at one day. Let's just dig a bit deeper into these. Okay, so let's look at these two. Let's go down to a 4 hour. So this in itself is interesting. That's your support area, right?
Right.
This 4 hour candle that's come through it has invalidated most of it. Basically, it's invalidated all of it because that's above it. So based on a 4 hour, you probably would take this. Price is probably going to go to there. Either the wick or the body. And actually, because it's a fast move, get into there. So that's the top. Get into on the back side.
So when you have an accumulation candle breaking multiple distributions, do you take the other accumulations into that break as well?
Well, it's more like looking at this structure now in a lower time frame. It's more the fact that this distribution cut through all of this and used it to propel that move up, which actually means that there's not really a lot of support left in that particular support anymore. In fact, there's basically nothing. There's some support slightly above the support, but that's not what you're looking at. When you're looking at that higher time frame, you don't want support above support, you want support in support. This is a relatively clean order block. There's 3 parts to it. So 1, 2, 3. And if you then really wanted to refine it, you would look at this back candle of those 3, and you would go down to a lower level. And at that lower level, you should find 2 to 3 parts. So 1, 2, 3. That part is going to create a very fast bounce. That part can too, and that part's slow if the price ever gets there. So yeah, based on that, you probably would. See all these wicks coming down through here? There's not really any support in that support, so you'd delete that. You would enter off that, and you would specifically enter off that. Being 1, 2, 3. And yeah, so that's why it completely wiped out that. Yeah. That's why it went into there. So you can investigate like a support zone at a lower level and just see whether it holds support at a lower level. And if it doesn't hold support at a lower level, it's not going to hold support at a higher level. So that's that candle actually is pretty much invalidated. This candle, on the other hand, had a nice clean support. If you were just being pretty conventional, you would enter there. But then digging down into it, you can find the back side of the order block versus the front side and so on, and then you can enter off the one that you know is going to get hit first, which created that big move up. I used to take heaps of order block trades.
many
fun
hours
things.
do you watch charts a day before you feel like you hit a burnout?
I don't really have anything else to do in life apart from manage some properties, and I don't even do too much of that. I hired a friend as a property manager the other day because he's a bit hard up for money. I paid off all his credit cards and everything a while back, and he's still struggling because life is just bloody hard in this country, and he works full time, and he did his back, and he was a van driver, and all he's ever known has been a transport driver, and he did his back, and then ever since then he's been doing just like entry level minimum wage jobs because he just can't get a job if all your qualifications and everything are in an industry that you can't do any work in anymore. And yeah, so I had that thought around, well, I can just keep paying his bills, or I can find him a job. So I got him managing a couple of my dorm properties, and he's loving it. He's been in there
Nice.
changing light bulbs today.
That's
That's
awesome.
right. But it's which now means I have even less to do.
Yeah.
Would there ever come a point in time where you feel like you'd step away from it, or
Oh yeah, probably the end of this year, I'd say. I feel like maybe I'll go travel or something. I sort of said to myself this would be my final season. I don't really need to keep doing it. Because you do, like, you'd probably spend, hours looking at charts and maybe 1 hour taking a trade. And then you set up a few swing trades and then you just let them go. And yeah, there's not really, it's not really that interesting. It almost loses its fun when it gets a bit too easy.
Well, I'm just grateful you took the time to teach us and got you before you ride off into the wind.
yeah, thank you.
Yeah. I actually joined the IA Discord because I kind of wanted to figure out what all these people do when they pile up a bunch of money and how do they go about investing it long term. And, and all I really realized is there's these things called memes, and they're kind of funny. I didn't even know there was a memes button on Discord. Yeah. That's when was that? Oh shit! Still on replay. I was just looking at this going, oh crap, it's failing. Still on replay. Oh, there we go.
that was
So
a little while ago.
that's how you see a failing top. Yeah. And then look at all that accumulation.
Months.
Yeah, and that's where you'll be able to find breakout levels, which you find. So the rule of a breakout level is going to be a level. It's going to be a break level that creates a break of trend instead of continuation. So it's going to have multiple strikes. So you've got, that's a break level, that broken up trend. There you go. Boom. That easy.
Very cool.
Don't even have to put lines on a chart really. What's this there? Tricks to try and find them early.
Would you say there is some happening right now with how low we've come?
Yeah, like I'm in two minds with Sol. I think it's going to go up, but it's potentially going to run into one hell of a reversal down to a dump. And if you look at market cycles, like we are due. Let's see. What's it called? Load blocks or something? What's it called? Please don't call us. T blocks. Here we go. And I had it 3 times. Okay, so these are basic. This is basically market cycles. And when you get to, so all through here is basically where you should be accumulating. Here's where you should be taking profit. Normally you get a dip and then a rise. But then you move into your bear market. You run it down, you accumulate, then it goes up, and then you start taking profits. And it doesn't surprise me at all that you see all these coin glass transfers of, $500 million and all that kind of stuff at the moment. There will be a lot of people moving money around and taking profits. But if you look at the way this area tends to work, is you should see something like this. Like that. And we haven't really had that yet, like that. So they're not all exactly like that. Like if you look at the really old cycles, find Bitfinex or something, Bitstamp, here we go. So generally speaking, cycles are just the same. Accumulate, start taking profits, down into bear market, accumulate, go up, start taking profits, down, accumulate, go up, start taking profits. But there's usually a swing in that area there. And that one was just straight up. That one was hard to see. So old. But, so, up, down, up. So yeah, we should be due for something. You don't just go through this in a straight line. It's either going to go like that. It's going to go like that. So yeah, from a really big picture perspective, that's what I think. It doesn't mean anything if you're buying down here.
Mm-hmm.
And that's probably where you'll see me on Discord again. I will be back about, let's see, about here.
2028, we'll see you again, Capitan.
Yeah. Visit here. Visit here.
I mean, that's your long-term investing strategy right there.
Yeah.
Yeah.
You don't need much else.
Yeah. No, and it changes. Like all the trading stuff is really fun, and it's a way to build a bag if you do it properly. It's a way to blow a bag if you don't do it properly. And but really, the money is made just by simply buying down in there, and you can still analyze a chart on a really high time frame during this period and figure out which ones are the ones that you should be buying. And that's kind of like where James and his fundamentals, like he knows what will survive based on fundamentals. That's great. And then you can structurally look at those charts and know whether they're going to pump. Like this was one that I was saying to people when it was down here. I was saying, just buy this fucking token. It's got no resistance, and it just shot up. So
Awesome.
yeah, because you can tell a lot by the way something moves. Like it goes down, it pumps up, it clears its resistance. It goes down, it pumps up, it clears its resistance. It goes down, it goes into accumulation. It's got no resistance. What's going to happen when they finish accumulating?
It's gonna explode.
Yeah. Hello. So that'd be sort of the idea for like, the next bear market is you're looking for tokens like a money market token. They're making money. They've got heaps of profit. You're looking for the ones that structurally are free to fly. They're not going to fly because ultimately this is all manipulation by whales. Like it's pumping the price up to distribute and take profits. They accumulate, they pump it up, they sell it. Hype brings in the fresh meat, they sell into the new meat, into the fresh meat. But they set it up in a way that makes it very easy to do it later. Yeah, if you watch the low time frame charts enough, you'll see kind of what I mean if I say they spend enough to put the price into certain places that then they get assistance from all the algos to get it to move. Like if you put support resistance lines on your screens and then you watch 2 minutes before the close of a candle that there's just enough sell pressure to push it below a line, and then the next candle opens and the world of algorithms kick in and go, shit, it's going down, sell. And there's some very smart people out there that basically utilize those things to move price. You can also just make a living if you're patient by just putting a buy order on pretty much every single weekly support. It's another way to make money. There's a weekly support, hasn't been touched. There you go. Buy it. TP at first resistance. There. Take a trade. 194. 255.
Can you do the same in the opposite direction?
Yep, you could take a weekly resistance, and the only thing you got to do is once it gets hit, you got to open the chart and you got to look for where your TP point is, because this point didn't necessarily exist.
Right.
This existed before this, so you didn't know what this was until it was created. So it's not entirely set and forget. You want to check it once a week. Pretty sure people can find that time.
Right.
You could have done the same thing down here. You would have got it there. Where's your first resistance for that one? Remember we discussed this token has basically no damn resistance? There you go.
Wow.
That weekly is going to go up there. So there's $100 move. And there was your next target. It went all the way to that one. And that's it. Tap that perfect.
Very cool.
Yeah. So that's all there is to it.
Well, you make it sound so simple, and I guarantee you I'm going to go back and watch this video 100 times to understand it.
Same.
Yeah. Yeah, well, let's... Oh, ETH. One day, crossing Ray. Where's that?
It has a heartbeat.
Obviously, moving over a trend. Yeah, ETH's a great trade. ETH's an awesome trade. I don't know why everyone is not trading it. Here's your first weekly resistance. You might get a little bit of a struggle off that on a higher time frame, so that's about 3K. And I think you've just broken a weekly interior. We are about to. That can, well, it's on the line.
Really
The bugger's on the line. So take it to a daily and move it forward in time to the first daily, which is that one. So you're waiting for maybe tomorrow?
Maybe.
Yeah. Or, what am I talking about? Array your daily. you're done. So ETH will go to 3K.
Cool.
Wow.
So that's it accumulating through there. It looks like it's maybe taken out there, maybe even taken out its break level already. No, not quite. Yeah, so if it gets on the other side of that trend, which it is, it can target that, which is that break level, to reject. It may even go and hit that because it's pretty close. So it can reject off one of these two to create the next distribution candle to continue the uptrend. So, because that uptrend's not broken. Neither's that. So it's still in an uptrend. See, the thing that everybody bags is the thing that they're gonna pump it up. So yeah, like trading from there to there or there to take your first TP to rebuy when it comes back and finds support. At this stage, support would be there. So up, TP, down, re-enter, up, TP. Or up, TP, down, re-enter, up, TP, if it doesn't hit that second one on the first go. And there might then be a different support in here to re-enter and then go up. So it could be up, down, up, or it could be through that, down once, then up, or that break trend. So you got no breakout levels in that. So yeah, so probably up, down, up, or up, down, up.
I noticed that in everything you've showed us, you've only had the volume indicator, which is, I mean, it's awesome that you do all of this without indicators, but is there one that you would use if you did? Or just go off a blank when you're manually doing it?
I've tried tons. None of them really seem to find stuff properly. I use TR main for supply levels, market sessions, and PVSR8 candles, which also just ties in with volume. And other than that, nah, everything's manual.
Beautiful.
Yeah, it just makes more sense not to rely on an indicator. I've tried lots of indicators for order blocks and support and resistance, and they just miss stuff. They're not very accurate, and they also don't necessarily work very well multi-time frame. There are limitations to what you can code in a PineScript to do with requesting data from multiple time frames. So yeah, I don't think anybody in the world could probably make an indicator that works very well. They certainly can't tell the future, and that's the problem. Mainly is that they're always working off lagging data.
Yeah.
So if you look at like moving averages, try EMA. Yeah. I was playing with EMAs earlier today. Where they choose to cross over, like you look at these EMAs coming through here, where are they going to cross over? Probably up here somewhere.
When the move's done.
The entry was down here. Like that's just, yeah. So things like that just don't work. It's why you can't have a strategy of buying and selling on things like EMA crosses, because what you'll tend to find is that you'll be buying at the same price that you sell at, because it takes too long in both directions for it to actually acknowledge there's a change. So, or you'll be using MAs that are so tight that you'll be buying and selling in the same moment, and that doesn't make you money either. So you've got to learn the effect, the cause and effect, like what is happening and what does that create. And then you can actually be ahead of time, like, that downwards move there on ETH. You've got a trend, you've got your first resistance, your first break level, you've got second, third, fourth different time frames break level, right? You need to know that if this candle closes, where's it going to go? Can I refine it down to a lower level? So if I take it down to 4H, can I find my breakout early? Well, yeah, I sure as hell can on this one. It was a great one. So there we go. That candle there.
Mm-hmm.
So if we just put a line on that, and we'll go back to the daily. So we're entering on the retest of support after the creation of that candle, which is that. So that is our entry. And then go back to our higher time frame target. Wherever that was. Doing that. Okay. So our entry is there at 2472. And we've got our first TP there, second, and you could TP anywhere through there really, but that's the one that's relevant to that time frame. So yeah, so I mean, if you're going to scalp that, entry, first TP, second, third, scalp done.
And it's awesome because you're literally just reading the story the candle's telling you.
Yeah, I mean overall that's a 6% move.
Wow.
And you can take that on pretty high leverage, with a really tight stop loss, because your entry is based off the lower time frame. So if we go down to that 4H again, well, height stop loss relative to a daily. So your entry is going to be off this, and if it hits the break level, it's invalidated. So that's your break level. So you should practice these and just see, how many of these you get. But TP1 invalidated at break level. Yeah. So it's a 1 to 1.46 to TP1.
Yeah.
And then if you get continuation to TP2, that's a 1 to 4.
How do you
If you go all the way to how do you decide whether you want to do it?
No, how do you decide whether it's continuation or not?
You'll get continuation if it breaks the break level.
Okay.
So in this case, once it hits the break level on TP2, it's going to go to the top one.
Right.
So yeah, that's basically how you tell. So you could choose not to TP at TP2 and just see if it goes to TP3. But yeah, that went all the way. So it wouldn't quite work out to be a 1 to 7 because you've taken profits along the way, but like it would probably average out to being like a 1 to 4 or a 1 to 5.
And in theory, once you hit TP1, you could bring your stop loss up to your entry?
Entry, correct. Yeah.
Okay.
Yeah, which I think in this particular instance, if you did that, you would have got stopped out before it went to TP2
Right. I
because
see
it went up, down, moon.
I see.
Yeah,
Very
because
cool.
you are going to get a rejection of it. So that's when you also just say, well, if this is a guaranteed trade, if I'm going to get that, do I just put $5,000 on this and double my money or over double my money? You know, do I just go $5,000 risk, $7,500 win, done?
Yeah,
That's
how many?
awesome.
The probability is higher on the first one.
Correct. Yeah. So it's no different than the fib system. If you would have fibbed that candle, the probability on the 1618, because we're now trading with trend, we've broken trend, so we're going up. So we are trading with trend, and the probability of trading with trend and getting to the 1618 on a fib system is 100%. So it's, yeah, that's,
High leverage play, take your TP.
yeah, yep.
Very cool.
And
A lot.
that's how I built my trading bag, was ridiculous leverage. I've got screenshots. I don't know if I got them on my current phone. One of my phones fell in the ocean and it wasn't backed up. But
Oh man.
I've got all the back when in my country you could use Bybit. I've just got 50 and 100x trading screenshots, just like constantly. I used to go to the bar and I played this game, and it was basically like win a trade, have a drink. And so I funded a crypto.com credit card. So then I just funded the entire drinking thing. But of course, as you start to get a bit drunk, you're not very good at trading.
That's
So,
awesome.
yeah, it didn't go so well in the
Yeah.
end. But it was a fun game. You know, I was like, all right, I feel like some loaded wedges. Right, time to take another scalp. And you couldn't get the loaded wedges till you won the scalp.
That's funny.
Wow. That's a good way to be around it, I guess. That's awesome.
Good way to learn.
Yeah, good way to learn.
Otherwise,
They,
you starve to death.
they don't let you use a Bybit in your country?
Nah,
Okay.
the last government here, they tried to bring this thing where they wanted to put some form of tax on funding fees, and so it meant exchanges would have to have some separate taxation on the funding rate for when it was positive. And so effectively, like if you were in this country and the positive funding rate was 0.01%, it would have to be like 0.11%, and that extra bit would go to the government. And so a lot of exchanges at that time went, nah, go get fucked. We're not going to reprogram our systems for a shitty little country that doesn't have a lot of traders.
Mm.
And so, yeah, most of them axed New Zealand customers for leverage and only let them do spot because they didn't have a funding rate.
Wow.
Yeah, it was really annoying. I quite like Bybit, but
What-
whatever.
You use Bitkit now?
Yeah, yeah, they just
So
don't pay the tax. It's great.
so if you were to recommend one for someone that can, would you recommend Bitkit or Bybit or either one?
Probably Binance.
Binance?
Um, yeah, Binance has got the most liquidity. Um, it's generally speaking the most secure. The there is a slight plus of BitGet, which is that their order book algos, the things that basically smooth out the price,
Hmm.
they fix all of the candle displacements on higher time frames, which makes it very accurate to do fibbing, like fib targets.
Okay.
It's very, very like Binance and some of the other exchanges, OKX and stuff. Sometimes breaks aren't really breaks because the candles are offset. They might be 10 cents down at the top and 5 cents off at the bottom, but it looks like it's a broken structure, but it's not. So it's that kind of stuff.
Oh,
So
you're
that
getting down
was,
to the refinement of it all.
yeah, yeah. So that is one thing I like about Biget is just you can just look at a chart and see if it's a break. You don't have to sit there and go, oh, it opened lower, closed lower. Did it close lower by more than it opened lower by, and that's the kind of thinking you have to do on some of those exchanges.
Gotcha.
Yep. Right. Time for dinner and a beer.
All
Sounds
right.
like sounds like a deal.
Well, hey, Sindoc, thank you again so much for your time. We really appreciate it.
Hey, look.
Absolutely.
Hey, look. That'll pay the bills for a month.
Wow.
That's awesome.
All right. Yeah.
Alright.
If you think of any questions or whatever, just message me. I'll respond
Well
if
done.
and when I'm not preoccupied, I guess.
Really appreciate it, man. God bless you and yours, man.
Yeah,
Really.
fantastic.
Yeah, no worries. No worries.
Yeah, thank you so much.
Right. Cool.
I'll
Catch you later.
catch ya. See ya.
Have a good night.
Bye.